Thank you very much. So fortunately, quite a lot of the UK systems are very similar to the European one, so I hopefully won't be repeating too much as we go through this presentation. But I thought it'd be useful to give a bit of a starting point and give a sense of where the UK maybe has slightly different experiences or has done things more recently that perhaps contrast with those European experiences. So just to give a bit of an overview, so this slide sort of covers some of the main carbon taxes or environmental taxes that we run in the UK. So the top row sort of shows our more explicit carbon pricing policies, notably the EU ETS, which, as people have said, is 20 years old, although in the UK actually it's a little bit older than that because the UK, along with Denmark, was one of the sort of pioneer countries on that before full implementation. We also have a measure called the carbon price support, which applies to electricity generators. And then the bottom row sort of shows some of the other alphabet soup of energy and carbon taxes that we sort of levy in the UK. There is a big red box in the middle, which I'm sure everyone in this room is quite familiar with, and the point that the UK left the European Union, and that moment was obviously quite important from a sort of general economic perspective, but also from a carbon pricing perspective. It meant that we had to reconsider what we would do outside of the EU ETS and how that would align with our net zero objectives going forward, which we had put into law in 2019 before the point of exit. So ahead of exit in 2019 and 2020, the UK sort of had an opportunity to reconsider, do we want to continue with an emissions trading scheme, or do we want to do something slightly different in carbon pricing? So we sort of had two tracks running at the same time. The top consultation was run as a continuation of the UK ETS, or as a continuation of the ETS in a UK context, whereas we also considered the alternative of a carbon tax. So from a policy perspective, the differences are pretty straightforward. An ETS fixes the level of emissions and allows the price to vary in response to economic conditions, whereas a carbon tax fixes the price and allows emissions to vary in response to economic conditions. So that was the sort of trade-off that was considered at the time. As it transpired, for a variety of reasons, not least sort of business continuity and the simplicity of sort of continuing the system, but also the close alignment that you can build into an ETS with net zero, it was decided to continue with an emissions trading scheme. So that was the sort of initial decision. This was then followed by a pretty major sort of consultation process, which was done across the devolved UK nations to think about how we can best align the ETS with our new net zero objectives. And this was a sort of pretty major consultation that was released in 2022 and has had sort of some major sort of reforms to the system that I've outlined in the red boxes. So the first one is obviously net zero alignment. So we've now aligned our cap with the net zero trajectory for the traded sector, for the sectors that are covered by the emissions trading scheme. So very similar to in Ireland, our traded sector covers about 25% of UK emissions. This is significantly down from around 50% in 2000. And it's even down since we established the scheme. This stat used to be covers about a third of our emissions. It's now much lower. And that's largely thanks to the driving electricity or driving coal off the electricity grid, as well as sort of other forms of industrial decarbonisation. We've also reduced the industry cap, so this is the technical term for the amount of free allowances that are in the system, and we set out that we are going to reduce that over time, and also to review how we allocate free allowances within the system in order to best combat carbon leakage. We're also planning to phase out free allowances in the aviation sector, expand to energy from waste, maritime, and we're also considering ways to introduce greenhouse gas removal. So Luca mentioned this in the EU context this morning. That's something we're also considering in the UK, and these are sort of open or live consultations that we're looking to take forward. We haven't taken forward the carbon tax proposal, but it's something that we've obviously now given quite a bit of consideration to, and it's interesting to sort of think about how things may have been different in if we had gone down that route. So I'm not going to go through all of this. Now these slides will be shared afterwards, but I thought it'd be useful just to see how the UK ETS has evolved relative to the EU ETS since the point of exit. So sort of an important point to note is the UK ETS obviously is much smaller than the EU market. It's about 10 10% the size of the EU market, and therefore liquidity has always been a bit of a concern for us. There's fewer allowances being traded back and forth in the UK system because it's a smaller share of the pie, and therefore price jumps may be or could be more extreme. For the first couple of years of the scheme, which don't actually work really well in terms of sort of not being too volatile, and it tracks the EU price pretty consistently. It's trading at a slight premium over that period, actually, very slight premium. Obviously, things changed in 2022 with the Russian invasion of Ukraine and the subsequent crisis in energy markets. This obviously hit the UK and the EU concurrently, but since then we have seen a divergence in those markets. So the UK price has sort of fallen below the EU price, and at points the spread between them has been pretty large. But still, overall, you can see on a sort of day-to-day basis, prices are still moving quite closely with the EU, and that's to be expected. Energy prices and global macroeconomic conditions are really important determinants of the ETS price, and so it's not a surprise that the UK and the EU are still hit or buffeted by the same sort of global interactions. And then, as you can see, there is a sort of an uptick and a closing of the spread towards the end of this chart, which represents sort of increased reporting and speculation and market statements to confirm that we are considering the case for linking the UK and EU ETSs. And in that, at the point of linking, the allowances will be fungible between the two systems, which means that the prices should equalise roughly. So that's the sort of potted history of the the UK ETS. I'll now go on to talk a little bit about the CBAM, which we're also developing a UK CBAM, which is similar but different to the way that the European Union is doing it. So we recently published our primary legislation, so the sort of core fundamentals of how the UK CBAM is going to operate. So these slides sort of are relating to that consultation that we're publishing alongside that. We will lay the primary legislation in the autumn and expect it to come into force next year alongside all the secondary legislation and guidance. So we are implementing the UK CBAM a year after the start of the definitive period in the EU CBAM. We didn't think we could deliver it to an acceptable standard by the end of this year. So we are taking that extra year. So as I say, the 1st of January 2027 we'll be implementing this. It'll place a carbon price on some of our most highly traded carbon-intensive sectors. These are the similar sectors to the ones that Maria just mentioned, with the notable exception of electricity, which we do not deem to be a carbon leakage risk in the UK. So the other sort of important difference, I think, between the UK and the EU CBAM is that our CBAM is being implemented as a tax, and so our delivery authority, our delivery regulator, is not the Environment Agency, it's HM Revenue and Customs. This is, again, partly for simplicity purposes. The UK has quite an interesting devolution settlement, which I don't propose to get into here, whereas implementing it as a tax means that we can move maybe slightly faster and be a bit more dynamic in responding to that. We also think it's better, more consistent experience for our stakeholders and businesses, and matches our capacity to deliver that on this timescale. But that does obviously create slight differences between the way that the UK and the EU are going to deliver this. So we've confirmed a lot of the policy decisions around this, which I'll go through in a second, and the consultation on the legislation is open, so if anyone has any thoughts on the way that we have operationalised those decisions, please do let us know. So how does the UK CBAM work? So you may know that the EU CBAM is a certificate-based system where you need to demonstrate, or importers need to demonstrate that they hold enough certificates at the point of import to discharge their liabilities. As ours is a tax, it operates slightly differently, but again, it's aiming to achieve the same end. So we're trying to measure both the emissions, the embodied emissions in the import, multiplied by whatever the CBAM rate is. So this will be set on the basis of the UK ETS price over the preceding quarter. But then we do offer a discount for any carbon price that's been paid in the jurisdiction of origin. Again, very similar to the way that Luca described the EU CBAM this morning. So it operates as a tax behind the border, which is obviously helpful on the island of Ireland, and that's the sort of the key differences between this and the EU CBAM. So a couple of sort of the major policy decisions. So as I said, sectoral scope is somewhat different. We're also, from 2027, we're going to be using a global default value. So if importers aren't able to generate or acquire accurate data on the imports of emissions from their exporting partners, then we will allow them to use a default value. This is the same as in the EU CBAM, but ours will initially at least be a single product level default value. We also have a de minimis threshold. So this has been increased from £10,000, which was the original proposal, to £50,000. Again, as Lucas said this morning, if we're capturing 95% of embodied emissions, then the sort of impact on trade and things like that of increasing that is not deemed to be worth it, and not something that we think HMRC can realistically enforce. And we've also, I've mentioned the sort of overseas carbon price. So just finally, I'll sort of just show you where we are in the process of delivering the UK CBAM. So this looks like we're halfway through. We're probably a lot further than halfway through. We're currently delivering the primary legislation, and we're into we've made most of the sort of major policy decisions, and we'll be into sort of legislating for that over the next 18 months as we get towards delivery in 2027. So thank you very much for your time. Looking forward to your questions later.